Hello everyone, this is going to be the recap from the 28th of November to the 2nd of December regarding the S&P and Nasdaq and generally the US indices and bonds. Again, if you have watched the latest recap, I did say that the volumes will be dropping a little bit. This is the daily volume in S&P. That was on, we had a spike in volume on the Powell speech, which was a little bit dovish. So that's the new, a new development, let's say. Dovish, I mean, I wouldn't say it was dovish, it's just the market wanted to take it dovish. Essentially, he said, like, we will continue a smaller increment of rate hikes. Again, if they hike with smaller increments of 50 basis points up to 7%, does it make any difference? Doesn't. Just the market trades effectively what it wants to hear, yeah? And they want to hear a dovish speech. Dovish it is. So, regardless of what the equities did on this week, let's take a little bit of the bonds. Now, again, this is the US 10-year. I did say that trading might get a little bit more interesting above this level. We have broken this level, and on Friday we had NFP, which was higher than expected, but unfortunately the devil was in the details. The manufacturing jobs have essentially plummeted, and what has been kind of rising is the leisure and the hospitality sectors. That's not exactly very strong, but it is quite strong. What was very, very strong was the averaging earnings. So that's going to be a problem for the Fed, with the averaging earnings being around 5%. That's way too high for the Fed to, let's say, pivot. Yeah. But let's see what's happening in the bonds here, where the truth is out there, let's say. So this is the 10-year and this is the 2-year US. So finally, with a Powell speech, the 2-year went out of hibernation and ticked a little bit higher. By the way, we're trading now in the futures the March contract. Deck has expired. Now the market is kind of predicting a recession and that we're going to have lower rates in 2023. I'm not here to judge what the market is doing. I'm just here to show you what the market actually is doing. So that was a little bit a dovish week. Now, in terms of volatility and everything, let's go back to the daily charts. Here's the S&P. So what? You are standing in a range trade zone, yeah. So we are standing in no man's land for almost a month, yeah. And then on Powell speech, you have a spike to the upside. I did say, and I have notified you, I have warned you, let's say, and from, I would say, the beginning of November, that volumes will be dropping this year, and they are dropping. The traders are tired. Nobody has a clue what is going on at the moment, and I personally don't have a clue. Everyone is waiting for new data that are coming next year, and please take note what is happening in December doesn't really matter. Yeah, it's a dead month, and from my experience, the moves that are happening in August and the moves, either it's upside or downside that are happening in December, they can very quickly taken out in. So can go very, as in August. Yeah, we're going slowly up. I don't think you can see it here on the daily charts. Let's go to the daily charts because it's a futures contract. You can actually see it. Okay, let's go. So. So August, what? You had a very slow upset, no volume again, no volatility, slowly up, ranging, slowly up. And September kicks in, where all the volume is coming back, and boom, in, I would say, 3 or 4 days, the whole August move was given back. So the same could happen in December. Again, that is an opinion and speculation. All I'm trying to say is, like, don't spend too much time analyzing what's happening in December. It's a dead month, and the figures are not really, they don't really reflect the economic situation in December. So the real trading again is going to begin in January. The only interesting chart I would still, it still puzzles me, is the long euro against the dollar. It has been trending up. This is the daily candle, so that is quite a move. And if we look at it technically on Thursday and Friday, that was the Powell speech, which was a little bit dovish, and the euro closed above this level. So again, higher euro, expect higher equities. That's how they play it. That's how you can translate it. So higher euro against the dollar, higher equities. Yeah. The VIX is still pretty low. I still favor Nasdaq over S&P regarding day trading. And again, now next week, I think we don't have any major figures, so it's going to be probably range trade or start a new small uptrend to small uptrend. So when I say small, you know, small candles to the upside, small candles to the upside, and the main figure is coming 2 weeks from now on Tuesday. No, so not next Tuesday, the Tuesday after, where we have the CPI. Is it going to be higher or lower? I don't know. All I see that the oil is spiking up again. That being said, let's look at the oil, because it seems like the 2023 is going to be all about commodities again. Yeah. So let's take December as a pause in economic development. So let's look at it this way. Yeah. So this is the oil. It has spiked. It failed. That was the second time it's failing at this level. It doesn't look very good. We're waiting some news from OPEC as well, that they might cut production of 2 million barrels per day. We shall see. Again, I said I'm going to keep it short, and I will keep it short. This is Dow Jones. So again, everybody was talking about recession. So what if Dow Jones breaks the all-time high and goes another 5,000 points higher? Yeah. Careful on what you read, and be careful on what you expect. Right. So I don't think I have anything important to show you. Again, we had Davis Powell speech and positive NFP. Again, we have multiple job holders, so that is why it might be a little bit inflated in terms of the figure in NFP. The way they calculate the figure is it's a fine mess. So that is why you saw a rebound on Friday when that was, let's say, the move on NFP. That Nasdaq can slowly get back all the way. Was that tradable? I was a little bit tough. So again, we take each day individually. So until next week, unless you are following the daily webinar, I will be seeing you.